Welcome back to the show. Check out these headlines here. RippleNet no more. Former Prime Minister declares free speech a weapon. Say what? And we got one influencer that charts the road to 20K for XRP. And I think you're going to like it. We got that and so much more. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show. You can follow us on Twitter and YouTube for exclusive content. Right now, we have $1.71 trillion market cap for crypto. The market is off by 0.6%. Right now, 43,800 plus for Bitcoin, 2,300 plus for Ethereum right now. Tether market cap is 90.5 billion plus. XRP at the number 5 spot, getting ready to challenge that number 4 spot, BNB. Watch out. We're at 65 cents at the moment. We're off by 4.2 with a retrace in the 24-hour, but up by 5.5 on the 7-day. Let's look at the range of price, ranging between 0.6503 on the bottom and 0.6920 on the top. We can see we got a pretty wild, volatile ride. It's usually within a cent or so, and you can see it's a pretty broad range there. So XRP's been bouncing around overnight. We'll keep an eye on it. But look, until you've done it, and if you have not done it, and joined the over 538,000 registered users, what are you waiting for? Even if you think you can't, all you got to do is just click the link to the sponsor below, sign up and register, and find out what's available. You are not going to believe it. It is the best offering of private equity in the world. There's no question here, with the best affordable minimums to go along with it. If you know anything about private equity, you just can't find that anywhere else. And the top quality companies that are helping to build out this space, click the link to underneath the video and get started. Now, look, I'm going to play a piece of this, and you're not going to like it, okay? Let's just understand that. But we have to level set for where we're going here. I'm going to play this. It's Elizabeth Warren. Don't get upset. I know it's Sunday. I'm not happy about it either.
Mr. Chairman, so today I want to talk about how criminals are using our financial system to move money to finance terrorists, drug traffickers, and sanctioned countries like Russia and Iran and North Korea. Our witnesses are the CEOs of the largest banks in the United States, and they deal with this issue every single day. Mr. Moynihan, you are the CEO of Bank of America, so let me ask you, if a terrorist group that wanted to attack the United States tried to move money through Bank of America accounts, do you have systems in place to identify that activity, to report it to law enforcement, and to shut it down?
Yes, we do, Senator.
Okay, Mr. Diamond, you are the CEO of JP Morgan. What about you? If a terrorist group tried to move money through JP Morgan accounts, do you have systems in place to catch it, to report it, and to shut it down?
We have extensive systems in place, but no system is foolproof.
Okay, but you do have systems in place. Work on this every day. And let me just ask all of you, in the interest of time, just raise your hand if you have those programs in place. Good. I see.
Okay, so the people that have their hands up are the people that Elizabeth Warren is working for, right? These softball questions that she's setting up for the banking community, right? Asking Jamie Dimon if they got procedures in place to stop all kinds of bad actors. Well, apparently that isn't foolproof. Even he stated that, because JP Morgan's been caught trading U.S. Treasury bonds illegally. JP Morgan's been caught manipulating the silver market. Oh, what a ruse it all is. And I think we all understand as well that, there is no bigger product being used to do illicit transactions than the U.S. dollar itself. Is it not?
Today's terrorists have a new way to get around the Bank Secrecy Act, cryptocurrency. Last year, an estimated $20 billion in illicit crypto transactions funded every kind of dangerous criminal. North transactions. Can
Let's
you
get to it.
explain traffickers and rogue nations?
I've always been deeply opposed to crypto, Bitcoin, et cetera. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems have been built up over many years, know your customer, sanctions, OFAC, they can get bypass all of that. If I was the government, I'd close it down.
And now look at the grimace face on Moynihan from Bank of America. God bless him. You know, they got a patent with Ripple. You know, look, I think the biggest part of this is understanding that there is a huge difference between the way the finance world sees things like XRP and Bitcoin, right? Clearly, there is a huge difference. And in fact, there's so much a difference here that Kristalina Georgieva is going to lay it down. Let's listen to this quick clip about how they've broken the market down into 3 different segments. Take a listen.
But we should not be mistaken to immediately classify everything in the digital money world in a negative way because
Please tell Elizabeth Warren this, Kristalina.
there are 3 categories. The first one is central bank digital currencies. They are backed by the state and they offer finality when transactions are settled. This is a universe that, as you said, 90% of countries are exploring. Who crossed the finish line first? The Bahamas with the sand dollar. But now we have Nigeria stepping there, and there are many pilots, of which the largest universe of a pilot, which actually made me wake up and say, well, this thing is moving so fast that the International Monetary Fund has to embrace it. China with a pilot with 128 million participants. Now, the second group, these are the stable coins. Some of them deserve the name because they are backed by assets, and when they're backed by assets 1-to-1, they're really stable. They look a little bit like money market funds, but they are money market funds in this digital space. And then we have lower degree of stability. The less there is a backing, the more you should be prepared to take the risk of this thing blowing in your face, which is what happened some days ago. I want to be very, very direct that I do feel that for the people who lost money, because part of the reason they lost money is not really being well educated on this new investment world. And I want to go to the third universe, the crypto that is really not pretending to be backed up by anything, not designed to be backed up by anything. It is really the trust that is built in a way that brings value. It is an investment class. When we say, I always get upset and then I get occasional hate tweets, when I say that Bitcoin may be called coin, but it's not money. Why? Because a prerequisite for something to be money is to be a stable store of value.
Exactly. Stable store of value, a medium of exchange, right? All of the things it needs to be a currency, for which it is not. And they're going to put it in the investment class, and they're going to let it run its course. And at some point, you're going to find out that the luster of Bitcoin will die off if it doesn't start finding real application of use case. Maybe Lightning Network does that and begins to get past some of the problems they've got. But, you know, this is something to really pay attention to. Now, let's move to this very quickly here. Now, I'm not going to play this, but this is Raul Ivani essentially remarking the same thing about global regulatory standards and about how, you know, one size does not fit all. You have to get an approach that will work for every nation as they develop CBDCs and or stable coins alike. Now, we understand that RippleNet has been rebranded into Ripple Payments. Now, if you remember, and you've been here for a long time in this space, you know, Ripple first started out with XVIA, XRapid, right? These different products were isolated down into these small little, this does this does that, right? XRapid used XRP for settlement, where other parts of what they offered, the suites of products, didn't. Then they combined and went to RippleNet, right? Now RippleNet has grown into just become Ripple Payments, with payout capabilities in 70 plus markets. That's what we're talking about here. And you could see here, it gives it, this is from back in November, but this is just a reminder of the evolution that Ripple is on with their products and solutions for the financial system. Now, this is a great clip, and this is a post from Chad Steingraber originally here, who posted what he feels is his personal theory on how XRP takes a road to 20K. And I tell you something, I really like this. And shout out to XRP Mickle Markets here, who converts this.
I wanted to give him all the credit here. This thing was...
We want to give him all the credit too, but we got to give Mickle Markets some credit, and XRP Drops for sharing it, but for setting this up, because he used AI to convert this thing so we could hear Chad's theory about how XRP makes its way to extremely high value. And I think that this is an excellent explanation. Let me just see if I got this right here. I want to make sure it's at the right time marker. 1 second. I'll cue that up for us here in a second. But as you listen to this, if you're familiar with the Shane Ellis theory, this sounds very, very familiar to me in the same regard as the Shane Ellis theory does. And I still believe that the Shane Ellis theory is very much in play, and basically is saying that, once the OTC market is bought up, then you're going to see a demand for the institutions to come to the retail market to buy what's left. And this will begin to stair-step the price up in a very, very high fashion. I think you're going to enjoy this. Let's cue this up.
The Chad Steingraber theory, the road to a $20,000 XRP. Grab a drink, grab a snack, and let's take a ride. Let's start with some financial housekeeping with 3 basic principles that determines the value of an asset. First, supply and demand. With small demand, you'll be left with a supply of assets that have little value. The opposite, you'll have skyrocketing prices. Second, market appreciation. This is the willingness to pay a price for an asset of perceived value. Third, limited assets. The Mona Lisa is valuable because it's the only one. We can make copies, or what we call derivatives, but we can't make more Mona Lisas. Also, because of its importance to society, we place on it a high price. That value is in our minds. Now for those new to XRP, let's establish some facts. XRP has a limited supply of 100 billion. Each ledger transaction destroys or burns a small portion of XRP to validate its transfer. Therefore, the asset is deflationary. You can issue any other asset on the ledger as IOUs. XRP is dirt cheap today because almost all trading is a small public pool of existing money that's essentially wash trading back and forth through retail. The public supply is important because that determines the price. Circulating supply is king. Today XRP's market cap is $18 billion. But wait, that doesn't mean there is actually $18 billion of money that has been put into XRP. There's far less, as the market cap is just a reflection of the current value anyone is willing to pay. We've been told the story that banks will send dollars to public exchanges, convert to XRP, and then convert back out as something else. This is Ripple's software ODL, on-demand liquidity. This won't necessarily drive up the price. ODL is really for the little guys, leveling the playing field for small banks and money transmitters to eventually eliminate dependency of correspondent banking to major banks, allowing competition to flourish. ODL is for the minor leagues. Bank of America, Chase, Wells Fargo, ECT, will not use ODL as we know it. If you think Chase is going to rely on Kraken or Binance to source public exchanges for trillions of dollars in global transfers, I have a nice igloo in Florida to sell you. This is where it gets interesting, because the road to $20,000 XRP involves privacy. They've been very clear and honest with us. XRP was never meant for public retail trading. We were the pitchers in warm-up practice before the game begins. Ready for the big leagues? Banks require privacy. That's not gonna change anytime soon. Let me be clear, no bank on earth will expose their internal ledger transactions to public. The privacy is for you, for the bank to conduct business and create loans without prying eyes. Welcome to the Hotel California. You may check in anytime, but you may never leave. It's public that Bank of America has a patent with XRP wallets integrated into their back-end systems. So, if they don't use ODL, what's up with the digital wallets? Private XRP ledgers. XRP will become a reserve currency asset. Remember from Ripple, banks holding XRP That's the holy grail. Remember, XRP can issue any other type of asset. CBDCs can be issued. That means Bank of America will create Bank of America coin on the XRPL. Bank of America will create a private ledger and hold XRP as a reserve asset, like how a central bank will hold gold as a backing asset. Bank of America creates Bank of America coin, an XRP derivative internally for tracking balances in user accounts. You see dollars in your account. Internally, Bank of America BOA can do whatever they want, as long as they hold a balance of XRP. They are not going to send their XRP anywhere, just like a gold reserve. In fact, they will seek to increase their balance to grow their business. So how do they send their money to another bank? Enter stage right, institutional grade liquidity providers, IGLPs, Polysign. This is also a private XRP ledger that holds a massive basket of different digital assets. The IGLPs also hold a balance of XRP because they are the third-party exchange that requires a transfer of the issued IOU derivative into another IOU derivative. Why? Chase Bank will never hold Bank of America coin. This would be called counterparty risk. So, Bank of America coin is sent to an IGLP, uses XRP to transfer into JP Morgan coin, because the IGLP holds all of them, Bank of America coin, JP Morgan coin, Wells Fargo coin, etc. That dollar amount of the JP Morgan coin is sent to Chase Bank and shows up as dollars in your account. Have you spotted the magic trick yet? They need XRP. It's now a business dependency, and just like gold, they're going to go beast mode on hoarding what now is the most valuable asset on Earth. The entire global transfer of money depends on it. And you'll never see it. Think of it as a digital arms race where every bank, every IGLP will hoard XRP to increase their balance sheets. The majority of XRP escrowed at Ripple will never see the light of day. When they run out of OTC, over-the-counter, options, what's next? The public supply. The circulating public supply of XRP on crypto exchanges is far less than people realize. A lot of XRP has been lost. Remember, banker Mellon held 1 billion XRP and died, his keys lost forever. There is about 20-ish billion on the exchanges. What do we have? Low supply. The banks, when they are ready, are coming for the public XRP supply, and once they have it, it's gone. Like as in, forever. You'll never see it again. So now imagine the banks and IGLPs, overnight, begin panic buying the public XRP market supply, an institutional FOMO run on the order books with multi-billions of dollars hitting like a tsunami, the likes we've never seen. What happens when you wipe out the public order books in a matter of hours? 0.30 XRP gone, 0.40 XRP gone, 0.50 XRP gone, $1 XRP gone, and when that happens, other exchanges start arbitrage to the highest price. Private wallets transfer into cash out. At that point, they're not coming back to dump on the public market for profits. That's peanuts compared to the business of global money transfers in the trillions. Guess what? I've just been talking about the USA banks. The global US dollar money supply in circulation is somewhere around 40 trillion. To be in the 1% of public XRP holders, you need somewhere around 70k XRP. There's only a few billion on the exchanges for public retail trading. Now add the rest of the world's banks. Add the world's billionaires who will want their cut. Add the quadrillion plus derivative market. Think about this real hard. What happens when that public circulating supply drops to only 1 billion? What's next? It's going sub-billion into the hundreds of millions. What's next? Only 100 million in public supply. What's next? Sub 100 million public circulating supply. What happens next? 21 million circulating public supply left for the rest of us. We all know what a supply cap of 21 million means, right? One last thing, notice I didn't tell you what price XRP would be at. You had that thought all by yourself.
And there you have it right there. And again, this aligns greatly in my mind with the Shane Ellis theory. Shout out to Chad. And, you know, look, to speak to this just a little bit here, because I don't want to go too long. But, you know, this is why I firmly believe there's an opportunity here for the United States government to do a wholesale CBDC. And they could underpin that new digital dollar wholesale CBDC with the XRP ledger itself. Because if you look at all the liquidity pools and all the different stable coins and CBDCs that would be made and housed and reserved on the ledger, all the tokenized oil, gold, silver, soft commodities too, wheat, soy, you name it, all represented on the ledger and reserves put there, you could have the most confident, shored up, new US dollar that is stronger than any other dollar in the world for the next 300 years. Not to mention the fact, to go along with Shane Ellis' theory and Chad's theory here, that what you ultimately see is a point in time where the institutions come to what is left, the liquidity that is left and remains on the retail exchanges, and to begin to buy up the order books to certain price levels. And as the Shane Ellis theory broke down years ago, it would not take a lot of money to buy out these exchanges. Now sprinkle in very quickly what we know today about automated market makers and the ability to control the slippage and the arbitrage in the market. You could very quickly start to close those spreads that are so volatile by finding those automated market makers on the ledger and getting those to work in a very fast, quick way to try to squash the huge volatility that we see like in a Bitcoin, right? It doesn't mean that we won't have it. Obviously, we'll have it. But you're talking about being able to minimize and tighten it as much as possible. A stabilization mechanism. All of these things are extremely interesting, and they're still in front of us. I want to shout out to Chad and shout out to Mickle Markets, too, for making that AI post. What a great thread and a great collaboration amongst everybody to share this stuff. That's why I'm sharing it today. Now let's share this very quickly here. Eggrad Crypto says, Super Guppy turned green, ladies and gentlemen. That's this right here. That's turned green, but it gets even better. We look at this chart most recent from Eggrad Crypto here, and he says, a future of support. Cast your eyes upon the chart below, dissecting the monthly time frame. It's intriguing that XRP hasn't managed to close a monthly candle above $1.20 yet. We've seen body candles, but a full body candle hasn't materialized. However, mark my words, says Eggrad Crypto, when the XRP finally achieves a monthly candle close with a full body above 120, brace yourselves for a significant surge to $2. At $2, I'm confident and convinced that this will trigger a massive FOMO in the market. Stay strong. He says, I got my sights set on the $27 mark, as you can see right there. We need to see these $1.20, $2 mark get hit to see if those become the support and indicators of a much larger drive in price action for XRP to $25, $27 plus. Now, ladies and gentlemen, I told you and I promised you, you're going to hear former Prime Minister declare free speech a weapon. Now, this is the real stuff that we've got to work together to get out and make people understand. The fight for freedom is much bigger than we ever knew, and it has not just but a fraction to do with crypto, but believe me, it does tie back into digital assets and crypto, because it's about the new monetary system and how do you control people by starting to dismantle the very things that they've had since they were born, like free speech. And we're going to cover that right now in here. Join us in the Freedom Zone, or go to digperspectives.com and hit the button and join us. You will not be sorry. We will catch all of you on the next one. Not financial advice from me or anyone else.